Module number 3, how to spot what can be a fake buy or sell zone on the market. Liquidity attraction. So finding the right zones will help you enter the best trades, but also finding what can be the fake zones, the smart money traps allows you to avoid losses and even capitalize on market traps to make money. On the previous module, I showed you the perfect example on GBPUSD where I took a short position into retail traders stop losses and then move away from it. In this module, I'm going to show you even more examples so you can train your eye to be able to see this type of setups. So once again, this is going to be super interesting. So when you spot a potential setup forming in the market, you should remember that you are not the only one seeing it. There are millions of traders worldwide eager to make money. And from my experience, the more obvious a setup looks, the more likely it is to be a trap, especially during the key times like London and New York Open, when everyone is behind their charts and ready to jump into a trade. So here's below an example, a generic example I draw to show you a little bit what can happen during the London session open. As you can see during the Asia session, we've been building a bit of buy-side liquidity, breaking structure high, okay? And most importantly, we've been building this liquidity trend line with the first point here and second point that creates here a potential opportunity for all the retail traders to enter a long position, okay? So when you see this type of setup, very obvious setups, you can just zoom out a little bit and try to understand why the banks and financial institutions, market makers, are giving you on a silver plate a setup like this. It is for a reason, because most likely they will manipulate the price into the wrong side of the market to bring sellers, to bring buyers out. In that case, if we have a lot of buyers here, to take out all the buyers and potentially move away from this area, okay? And this example is happening multiple times across different pairs every single week. We have a reaction from the initial point. So retail trendline traders are entering the market on the third touch, and these guys here are in profit for a long time. So what they're gonna do, they're gonna just place their stop loss at break even, and some of them are gonna place their stop losses below the previous market structure low, okay? In this example, I would have just draw it a little bit lower because this is something that happens usually. It's that the price will give them a fake reaction so they can put their stop loss at break even, but also that will give the opportunity to smart money traders to enter a short position. And at some point, both of trendline traders and smart money concept traders are going to be in profit. So what the market and what the banks and financial institutions are going to do, they're going to push the price into the first reaction of the trend line into this trend line traders stop losses. When they are all out, they're gonna push the price into the second trap created, the smart money traders, okay? And now what do we have? We have a break and retest. What can happen next is a potential retracement, take out all the early buyers, breakout traders, take them out, and then continue to move higher, okay? This is the type of setups I aim for during the London and New York Open. And always remember that the more obvious the setup is, the more likely we're going to have a trap occurring on the market, okay? So in this example, both SMC and trendline traders have been taken out. In order to spot what can be a fake or a good buy zone, we are going to use timings and reverse engineer the process. Because here's what majority of traders are asking themselves before taking a trade. Majority of the retail traders out there are saying to themselves like, I need to make money today. Where should I enter a trade? A smarter question you should ask yourself is, I have 100,000 lot size to trade right now. Where is the best area with enough liquidity for me to place all my position? Okay, and by thinking this way, you're starting to think like an institutional trader focusing on liquidity. This helps you understand where big players might move the price to in order to enter a large amount of position. Okay, because if you are right now, if you are thinking like an institutional trader and you see, if you are thinking like an institutional trader and you see the price reacting from that zone, you know that below here, below this area and below this area, there's a ton of stop losses sitting. So your goal will be to inject all your position within this price region. And what's cool about being a retail trader is that you can also enter the market here because you are entering with small lot size and you don't have any position size and liquidity problems. You can easily enter, even if you are trading 500 lot size, you can enter the market here and take from C to B the trade with the trap. And then here, where the institutions are going to be injecting their position, take another position to move away from that trap. Okay? And I ask you these questions: if you had right now 100,000 lot size to trade, where will you enter? Point A or point B? You already have the answer. We will be focusing on point B because point B will be the point made after the liquidation of this buyer's stop losses. So, for a short-term trade, you could short from C to B, as I told you, trade with the trap, and take profit at point B. Okay, C to B, take profit at B. And for a bigger move, point B will be good because it's now a liquidity area. And just above point C, there's a lot of liquidity still not liquidated. Because if we are looking at this example, from C to B, we have what? A new break of structure. So this creates a potential zone for smart money traders. Majority of the time, we're going to have a move into it. Fake reaction to bring sellers on board. Sell, sell, sell. They're going to place their stop losses here. And then the market is going to explode like that to the upside. Okay? So this is the type of setups we aim for. And over time, you'll develop a deeper thinking as a trader, which will help you ask you the right questions before entering a trade and start thinking more like an institutional trader. For example, here, you're probably going to ask yourself, why do not wait for the price to take out all these lows first to get involved on the buy position? That's a right question, and I answered it on the previous module because this liquidity and almost this liquidity here is not relevant for the price. This liquidity here is not relevant because we do not have a lot of stop losses sitting here. This one is ultra relevant because we have a lot of stop losses sitting here and we have a lot of stop losses sitting here. Okay, so this is exactly how you want to be entering your trades. So right now, let's dive into an example of a trade I took on GBPJPY. Okay, we're going to do the process once again so you can assimilate everything and also train your eye. Where do we start? We start with the Asia session. What happened during the Asia session? During the Asia session, we made multiple break of structure to the upside. We have a clear break of structure here with bullish candles, so we can guess that some breakout traders have been entering the market in this region. Where do you think they're gonna place their stop losses? Just below that low. Okay, so when the price was there, their stop losses were sitting here. Okay, all the stop losses were sitting here. But the price continued to make a move to the upside and broke another break of structure. Now the question you should ask yourself is, where do you think these retail traders, these breakout traders, have been putting their stop losses? At break even. Okay, so right now the last point of relevant liquidity for this huge move to the upside is here and not here. Okay, and on top of that, on the left side we had a huge resistance becoming now a support. And this is very interesting because, as you can see, timing, what we are approaching the London Open. That means we can potentially have some traps. So what Frankfurt did, the Frankfurt session is occurring just before the London Open, and as we can see, they created a break of structure low with a strong bearish candle, and they are returning back to this order block. This is a smart money setup. All the traders trading smart money concepts are involved right now on a short position. And for those who have been just waking up a little bit late, for those who just woke up late, they have another opportunity. And what do you think is going to happen next? It's a little bit obvious. Potentially a grab of all these stop losses. Okay, so this is a trade I took. If we are once again analyzing what is happening, multiple break of structure, okay, these breakout traders, okay, that we're looking to buy the market from this region have been stopped out. Smart money traders that we're looking to take the break and retest of the POI here, fake reaction, they are all stopped out. Right now we are creating what? A break of structure. We have a zone here. These buyers are now potentially in profit, okay? And we have a lot of stop losses sitting here because we have this first break of structure, price coming back, retail traders entering short position here, placing their stop losses here. Same for this move. Okay, we created another sell zone. We have doji. Where do you think retail traders are going to be placing their stop losses? Around this region. So what the price did, obviously, price just stopped out everyone. Okay, and look at the speed of the candles. This is something that we're going to be focusing on probably on week 2, the speed of the candle. This is here the London Open, and as you can see at the London Open we had huge bullish candles. That means big boys are currently behind their charts checking the order books to see if they can potentially from here, when everyone is stopped out, enter a position on the opposite side. Okay, so when you see this kind of candles, these are manipulation candles, and we need to understand the market intentions. Okay, trading, as I said, is not about drawing rectangles, it's about understanding market intentions. Why are they making a huge move like that? Potentially here to, after that, reverse. So as you can see, the two sell zones I showed you provided fake reaction. Okay, we had the first one here. This provided a fake reaction to bring a lot of sellers on board, and we had the second fake reaction. And here we have our buyer. Okay, this is the candlestick I was talking about on the previous module, the last order block that pushed the price into the zone. What we did, we came back to it, and this was here an opportunity to trade with the trap into all the stop losses. Okay, so this would have been here an entry. I missed it, and I'm going to show you in a minute what I've been looking for. I took the trade here, but a quick note, the speed of the candles, as I said, are very important too. It shows us the intention from the big market players. Big candles equal manipulation, equal intention of tricking people on the wrong side of the market and potentially moving away from that zone later. Now that this zone is liquidated, all right, this zone is liquidated. Where is the resting liquidity? The resting liquidity is here, okay? We have liquidity here and we probably have liquidity here too. So what do you think is going to attract the price now? Potentially this zone. So what I decided to do is to take a buy position with the buyer. That was the last order block that pushed the price into now the stop losses. Price came back, I took a buy position, and I was looking for that to potentially close my long position to get involved on a short position. That is what is called hedging. Okay, I think I'll be talking about it on week 2. Hedging is a way of taking 2 trades at the same time, and basically your buy position here will cover the sell position you will be taking here. Okay, so what I did is that I took a buy position from the buyer like this on GJ, and I closed it around this region, and I decided to what? To press sell, and the market just reacted from this area. Now this is interesting. Why? Because we have a break of structure to the upside, okay, and we are coming back into that zone and we are making a reaction. Now where is the resting liquidity? Potentially here and potentially here. So I expected the price to potentially make something like that and go visit this area. So I'm going to show you the full analysis, the price of what the price did. The price basically reacted from this zone, provided a fake reaction to the upside, went back down, came back here. I've been stopped out at break even on that trade. And at this point, when we had this multiple break of structure to the downside, and we finally tapped this major, that was the last point. Remember, the last point break-even zones from the breakout traders here, but also from the break and retest traders. When everyone had been taken out, this is where I waited for the price to give me a relevant, a true break of structure. So the market made 50% body candle, good leg out, break of structure, price came back, entry on the 15-second, and I took that trade into the resting liquidity that was this here. So this is basically how I took that trade. I took 2 positions, and yeah, once again, if you want me to break down a little bit this, I'm gonna do it. If I can zoom it, no, I can't. So we're gonna just redo the work so you can train your eye. Okay, Asia session, what we did, break of structure to the upside, we have resistance, okay, resistance becoming now a support, okay. So we have also breakout traders getting involved on the trade, okay. They are moving their stop losses at break even, price is retesting that zone, and from here we have a ton of buy zones created. Price came back here, made a reaction. Smart money traders are in the trade right now. Stop losses are here. And what the price did, the price decided to go back here and just liquidated every single buyers to after that produce an entry point, and this is where I've entered my 2 position on GU. Okay, so it's pretty important to understand what is happening from an institutional perspective and also use timings, because these 2 traps created above, okay, these 2 traps were created here were easy to spot. Why? Because this order block was the Asia high, and above each Asia high, what do we have? We have a ton of liquidity, and it's become even more relevant when we have a break of structure and when the price is making a fake reaction. So this was definitely a fake zone. And when we have a fake zone, that means we have stop losses here. That means the price can easily tap this area. That means we can take a trade in line with the trap, in line with the liquidity. And from here, we can have potential short opportunities to move away from this liquidated liquidity area into the next relevant liquidity area. This is what the market did. The market took out the last buyers when everyone is stopped out, break of structure. We can have confidence on it because it is occurring just after the major trap when everyone is out, price coming back, mitigation and order flow, and this is where you can have this beautiful trade entry. Okay, so I decided to put 2 positions on this trade because it was obvious that all the buyers were taken out. Okay, so this is how I took that trade, and this is how also you can be able to spot fake zones and real buy zones. Okay, so the key takeaways from this video: timings and liquidity will help you a lot to identify what can be the fake buy or sell zone. And you are either going to take trades in line with the liquidity or away from a liquidity area. Think about it every single time. Liquidity is like a magnet for the price. Liquidity drives price. It's not about trend lines, it's about liquidity. Okay, so let's see what we can do on the next module. It's going to be super interesting too, and I hope you're enjoying your time so far. See you on the next one.